The simplest and most common type of order is a market order. In fact, when most people think of like, well, I bought a security, or I sold a security, really what they're talking about is they placed a market order is what they're doing. And market orders indicate that you're willing to take whatever price is presented to you, when the order is executed. You could say, well, that's the market price as an example. Now, it's not a locked-in market price. You might see it on your screen and place the order, but by the time the order is executed, it might be slightly higher or lower than expected. So it won't necessarily be the exact price that you're seeing once, because it all depends on the timing of the order execution. Securities that are frequently traded will execute faster, heavy volume type things, but some things like some securities that don't trade as often and have very low volume, it might take a little while for that order to be processed to match a buyer and a seller. So a market order, very simply, I'm buying or selling at the market price. And then there's another thing called a limit order where you can kind of adjust that. And a limit order basically allows you to limit either the maximum price you will pay or the minimum price you're willing to accept when buying or selling a security. I'll place a limit order and say I want to buy, but I don't want to pay more than this, or if I'm selling, I don't want to sell for less than that, is the idea. And that's the primary difference between a market order and a limit order, is that a limit order may not be executed if the target limit price is never reached. So let's say the market price is at 70 and if you put in a market order, it would be executed. But if you, let's say, said, oh, I don't want to do that, I want to, I don't want to pay 70, I'm willing to pay 68, well, then it might not ever be executed. So limit orders are executed in the order in which they are received as far as from the underlying broker. So, possibly an order is not executed if a price hits the limit target and then moves below it real quickly before the order is executed. So even if you see it kind of flash like, oh, it should be getting executed, because there might be even more, a little bit more delay there, that might happen as well. So let's look at an example of that, of both of these. So let's say you have the security here and you've done your trend lines, and you can see, oh, look at this nice trend here on the image on the right here, and you say you want to buy on the second touch, or near that trend line. All right, so you see that, let's say it's on a daily time frame, and so you're going to buy on the second day. You've seen the second touch as far as the close. Now you're buying on the second day, and as you can see on that second day, there's the last candlestick in our image here. You can see there's a wide range of prices from high to low. I mean, it tops around 73, and then goes down as far as the range down to about 71. So if you place the market order, depending where you're buying in the day, it could end up at any of those prices. And let's say you're looking at it, it's around 72.75 or 72.80. You place a market order, and it gets executed. It ends up being executed at 72.75. So let's say that's what you're looking at in this particular example. But let's say you're looking at 72.75 and you say, well, I don't want to pay that. I want to put a limit order in. I want to pay less than that. This is a buying situation. So if you put in a limit order for 71.50, let's say, well, that would be executed. You could see, depending on how it all flows during the day, but as you can see, at some point, there's more likely a chance it's going to hit at that 71.50 in that range throughout the day, as it would have turned out. You don't know ahead of time. That's how it would have turned out. But let's say in this day, and you're liking this trend, you say, well, I don't want to pay more than 70.50 or 70.50. Well, then you can see it never really got that low as far as in the trading range. So your order never would have been executed. Then you would have to wait till the next day and place a different type of order, or cancel that order and place a different type of, either a market order or raise your limit order up. So that's the thing with market orders. You're going to be able to buy or sell right away. And then with a limit order, you're setting some guidelines around that in terms of buying or selling. And just understand that depending on what guidelines you put, your order might not be executed at all. And don't be disappointed in that. That's just all part of the strategy of using limit orders to limit how high you'll buy and how low you would be willing to sell, to give a little more protection around that.